Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Ethereum. We're going to be looking at a whole host of charts ranging from risk management to regression lines to our logarithmic regression bands. So if you guys like the content, please go ahead and subscribe to the channel. We like to take a look at crypto in a different way than you won't find other places. Looking at crypto from a more data science, quantitative finance driven approach rather than your traditional technical analysis. So if you guys like the content, please subscribe to the channel so you don't miss anything in the future. We're going to be here for a long time going through this market cycle methodically, so please subscribe. Also give the video a thumbs up if you like it, and check out the Telegram channel in the description below. So let's go ahead and jump in. So the first chart here shows the price of Ethereum versus time with a color-coded risk dimension. So we've talked about this risk dimension before. If it's dark blue, it's around 0. It means it's historically our accumulation range, or the best time to buy Ethereum. When it's around 1, it means okay, guys, it's getting really hot. It might need to cool off for a little bit. Okay, and you can see that happening in 2017. Now, you can see our accumulation phase has been quite long, going from 2019. The beginning of 2019, we're now in July of 2020, and we've mostly moved sideways. And when we said we expected all this, remember, lengthening cycles are the name of the game, and we're likely going to be in a long accumulation phase. Now, one of the things we talked about is you have to always be ready for a move of Ethereum, because we know that Ethereum can move significantly when Bitcoin is above the 20-week moving average, and because of that, we're going to talk about that a little bit later in the video. The current risk level of Ethereum is actually around 0.4. I think it's just lower than 0.4. If we remove the risk dimension from the color and just put it on the secondary y-axis, you can see that the risk level is just below 0.4. If you know the way that I DCA into Ethereum, I buy Ethereum up to a risk level of 0.5, and I do it dynamically, meaning when the risk level is lower, I put more into the market. When it's higher, I put less into the market. And we've talked about strategies for doing this, and the way you could weight it, whether it's linear weightings, whether it's exponential weightings. You can choose a strategy that fits your need. So this is the risk level of Ethereum. I recently saw someone requested an update. So it's been a while since I posted this. So I wanted to give everyone an update on where we are for Ethereum's risk level. Note that in the future, I'm planning on putting some of this stuff into TradingView. So be on the outlook for that in the future. This is the Ethereum Bitcoin risk level. So I haven't really shown this as much, but you can see that we did reach that 0.9 to 1 risk band twice in 2016 when we had this parabolic move once Bitcoin held the 20-week moving average as support during the first time that market cycle, and then another time in 2017 when Ethereum saw a parabolic run when Bitcoin got to its previous all-time high. The last notable move was here at the end of 2017, but it didn't actually make it all the way up to this level. Because of this is a key reason why dynamic DCA is your best friend, or even just DCAing statically, because you don't know how high it's going to go. I mean, it just as easily could have gone to 0.2 and maybe reached this 0.9 to 1 risk regime again, but if you were counting on that, then maybe you didn't take profits in this phase. So it's important to show Ethereum fiat. It's also important to show Ethereum Bitcoin. You can see the accumulation phase here. We've basically been between a risk of 0 and 0.4 for quite a while now. And so 0 and 0.5, I should say, for quite a while now. So, as long as these both assets are near their fair valuation line, so a value of around 0.5 makes sense. So let's dive into this further, because I want to talk about, and I talk more about this in the premium video this week. So if you're interested in that, you can check out my website, intothecryptoverse.com. I give out a weekly report, a weekly premium video, a Google Sheets dashboard with live risk levels for Bitcoin, Ethereum, Cardano. We just added Chainlink and also Ethereum Bitcoin, and we're going to be developing more, and then all these will be going into TradingView eventually. This is at least the goal for now. I'm teaching myself. I've never used PineScript before. As you guys can see, I like just doing it on my own and making my own charts, because I just like the flexibility that it gives me to code it myself in some other external program. But I recognize that a lot of people do enjoy TradingView, and so yesterday I was trying to teach myself PineScript, and I just put in the regression band for Bitcoin into PineScript, so be on the lookout for that being released in the coming days. This is our primary regression band for Ethereum. Now, I've spoken about this before and the fact that, okay, well, it makes sense that we fit it down here. It makes sense that we fit it up here. I'm not really sure if it makes sense to fit it here because this was within the speculative bubble, but I don't have any reason right now to assume I shouldn't fit it. So because of this, it's being fit to these 3 regions, or these 4 regions, I should say. And this is the primary regression band we get, and our fair valuation of Ethereum at present time is around $250. So we're right around that fair valuation point. You can see that when we're above this band, I would consider it more of a shorter, a speculative bubble. So here, and then this last speculative bubble here. This is why taking profits is so important. I mean, again, you don't have to sell everything. This is not financial advice or anything, but personally for me, I find that taking profits, it's so freeing because you see a parabolic move up. You take profits according to a metric you've already established. This is what you're going to go by. You're not going to do it based on your emotions. And then you realize the profits. And then if Ethereum continues to go up, you continue to dynamically DCA. You sell more and more at each risk level so that you're selling more at higher risk levels. But at the same time, you recognize that you don't know where the top is. And if it comes back down, you can either reinvest or you're happy you sold and put it into another asset. Now, if you buy it or if you sell it and then Ethereum goes up, that doesn't necessarily mean you made the wrong decision because perhaps you put it in a different asset that hadn't gone parabolic yet. And so it's this game you have to play during the market cycle of, well, coins go parabolic at different times, and you want to take advantage of this because if you just think that, okay, it's going to go straight up to $10,000 in 2 months, it's not the case. It's smart to take profits. It allows you to continue to build your portfolio, to continue to even get new coins because you have a little bit of extra capital now that you can expand your position, diversify some. But if you never take profits, you're really left with a lot of uncertainty, and your weighted risk is very high. So in the same way that buying at low risk levels is good, because it reduces your weighted risk, you want to offset some of the risk when the price goes up because you're now sitting at, say, a large profit, but the risk level on all those coins could be 0.7, and you don't want to be at that risk level for very long, so you could sell portions of it to reduce your overall exposure to the cryptocurrency market. And again, I don't claim that this, you can already see we dipped below once. I don't claim that we're not going to dip below this band. It's entirely possible that we do. We've only have one market cycle to fit data to in the first place. It's not like Bitcoin where we have 10 years of data. So if we move sideways, it's not a huge deal. But again, as long as Bitcoin stays above the 20-week, I'm still fairly bullish on Ethereum, and we'll show we'll update the chart later to show that as well. Now the idea is that if you take the difference like we did with the total cryptocurrency market cap the other day. But this is different because it's, say, the value going through the non-bubble data. But if you take the percent difference between the price and the regression line, this is what you get. You can note that at the peak here in 2017, 2018, we reached a peak overvaluation of 3,000%, which happens to correspond to Bitcoin's overvaluation of 3,000% during the end of the 2013 bull run. So if we were to project out for Ethereum, if we assume, which is a big assumption, if we assume that it's one market cycle behind in terms of its macro level volatility, in terms of, say, like which helps in identifying like the Sharpe ratio, your risk adjusted returns, then maybe you would expect 1,000% overvaluation in Ethereum this market cycle. Now, if you were to expect that, then maybe this would be the trend line we would draw, and we would methodically increase to that 1,000% valuation over the next 3 years, with the final year being where it increases the most. Now, if we expect a 1,000% overvaluation, what does it overvalue to? Because the price now of Ethereum is only $250, so 1,000% overvaluation would put it around $3,000. But remember, logarithmic regression here, it monotonically increases. So by 2023, the fair valuation of Ethereum will be around $1,000. And if we're 1,000% overvalued, then we're going to be just north of $10,000 per Ethereum. Now, does this make sense? Could Ethereum reach a $10,000 valuation? Well, this implies that Bitcoin also reached a very high valuation. If Bitcoin is 100K or 150K, then Ethereum reaching $1,000 or $10,000 is more or less par for the course. Remember, during the last market cycle, at the peak, Ethereum reached a valuation against Bitcoin of 0.15. And if Bitcoin is 100K and Ethereum is 10K, that's a valuation of 0.1. So I know it sounds crazy, but the move from $1 or less than $1 to $1,400 was crazier. And the market cap of Ethereum back in 2015 was tiny, and then today, it's so much higher. It's like 4 or 5 times higher than the market cap that Bitcoin had back in 2015. I could be wrong about that exact number, but it's significantly higher. So when you say, okay, well, if it's a $10,000 Ethereum, well, that would imply the market cap is such and such, and that would be insane because the total cryptocurrency market cap is only a few $100 billion. Well, this is implying that Bitcoin is 100K, and the total cryptocurrency market cap is going up to $10 trillion. So this is the idea. If we do go up to $10,000, again, note that it would be but a fleeting moment in time. This is where a lot of dumb money would pour into the market, and you don't want to be stuck feeling, just overly euphoric. I mean, it's okay to be happy, but if you get to the point where you just don't sell because you're convinced that Ethereum's going to 100K, this is how you get burned, and this is what you want to avoid for the next market cycle. Now, these again, I would tell you that I will be putting this one into TradingView soon, so be on the lookout for that. And note that a $10,000 valuation is a ballpark number. It could be $6,000, it could be $12,000. I don't really know. What's a few K among friends, right? We always say that. If Ethereum is even $3,000 or $5,000, I'm sure most of us would be incredibly happy. If we just show our entire band of logarithmic regression lines here, it kind of paints like a similar picture of noting that during the last market cycle, we kind of held support on the orange line. During this market cycle, we're kind of holding support on the green line, which note that Bitcoin, throughout its entire history, also drops down one logarithmic regression line each market cycle. Also, each market cycle, the peak regression line is reduced two or three lines for Bitcoin, 2.5 lines for Bitcoin from each market cycle peak to the next peak. So we would expect Ethereum to do at least this. And you can see that even if we were to do this in 2023, we could drop down 1, 2, 3, 4 lines and still be at a $10,000 Ethereum by the middle of 2023, plus or minus say 6 or 8 months or something. So this is the general idea. We do note, however, that these lines I'm drawing are just squiggly lines that I drew in about 5 seconds. They certainly are. The only thing I can guarantee you about this line is that it's wrong. Remember, all models are wrong, but some are useful, because we also know that we could see a move in the short term for Ethereum. The reason is because Bitcoin currently is above the 20-week and the 50-week moving average. When it's above it, Ethereum tends to do really well. You can see each time it does really well. When Bitcoin's below it, it tends to perform not so well. And in fact, this is why I say it's good to diversify, or to not diversify, to reduce your exposure of the crypto market when Bitcoin is below the 20-week moving average, because the 20-week moving average is our line of support for a bull market, for confidence in the bull market. And if you plot it with respect to Bitcoin, you can see that typically when Bitcoin is above the 20-week and the 50-week moving average, then Ethereum Bitcoin does quite well. It doesn't always do well. It does well almost every single time except this one. So the only time it didn't do well was in 2019. However, if you took your Ethereum and converted it to Bitcoin every time the weekly candle closed below the 20-week moving average for Bitcoin, and then converted it back on the candle up, you would have always gained Ethereum. And I'm not going to go through each of these here. One of the guys who's on the premium list made this for me because he wanted to test it out himself. I believe his name's Peter, and it shows, okay, when Bitcoin went below the 20-week on the weekly time frame, the weekly candle, if you had converted your Ethereum to Bitcoin then, and then converted back when Bitcoin closed above the 20-week, you would have always ended up with more Ethereum. And then on the other hand, doing it the opposite way would have worked 4 out of 5 times. So I'll let you guys look at that. Finally, I get a question, well, should I buy Ethereum now? Well, I can't tell you whether you should buy Ethereum. Am I DCAing Ethereum? Yes, I am. I will continue to buy Ethereum until the risk level reaches 0.5. Once we're above 0.5, I'll probably begin DCAing my sells. Now, if you're expecting an immediate 90-day ROI, then historically speaking, buying in the summer has not been smart for Ethereum in terms of the 90-day ROI. If you look at say 2015, you can see the 90-day ROI in August would have been less than 1, meaning you're losing money. If you look in 2016, you can see the 90-day ROI buying in the summer is also basically right around 1 or lower. In 2017, despite that 2017 was such an amazing year, the ROI buying in the summer, buying in these 3 months, was pretty bad. Right around 1 compared to 10x slightly before. 2018 buying in the summer with your 90-day ROI on Ethereum was bad. 2019, your 90-day ROI buying in the summer was bad. What does this say? I mean, basically, if you're buying Ethereum in the summer, then historically speaking, it hasn't been the best decision. Now, if you're me, you don't care about the 90-day ROI. What you care about is, you care more about, well, I want to know what is going to happen in say 3 years. Well, this is why I'm continuing to DCA, because I don't care at all about what the 90-day of ROI of Ethereum is going to be. For all we know, we could have an anomaly and the 90-day ROI be 3x. But just know that if your goal is to get in and out of the Ethereum market in 90 days, then buying in July has, this center red line here, historically not so great. Again, this is not financial advice. This is just what the data says. Buying at the beginning of the year or the end of the year tends to be a lot better. You can see that concave up pattern. One pattern here, another pattern here, another one here, and another one here. Concave up all 4 years, 2016 to 2019. Maybe 2020 will be the same. Okay, that's all the charts I have for the video. Let me know what you guys think about this. These are a lot of charts. We talked about primary regression line. We talked about the risk level. We talked about your 90-day ROI. We talked about, the Ethereum, the performance of Ethereum with respect to Bitcoin based on what Bitcoin's doing. Let me know what you guys think about it in the description below. If you want live access to the risk levels, you can sign up on my website at intothecryptoverse.com. You can pay with crypto for 6 or 12 months and get a discount, or you can just pay with fiat monthly if you want that. In addition to getting live risk levels on a Google Sheets dashboard, you also get other things on that dashboard too, like it shows you different strategies for selling, and then you can put in, say, certain amounts of crypto for Bitcoin and then experiment with different strategies to see how the projection would turn out. And you can get an idea of how dynamically DCAing really isn't. It might make more sense when you go through that exercise than never going through that exercise. In addition to the Google Sheets dashboard, you will get access to a weekly newsletter. And believe me, these newsletters are pretty intense. They're filled with quantitative analysis. It's almost no traditional TA, so you're not going to find this a lot of other places. So check that out. I'm actually about to publish the weekly newsletter right after this video. And then also you get a weekly premium video. So you get 3 things. You get a weekly premium video, you get a weekly newsletter, and you get a Google Sheets dashboard. In the future, we're also going to have trading view indicators that I'm currently developing. And some will be free, of course, like the regression line for Bitcoin will be free. But some of the ones that I develop you'll have to be on the premium list for. So let me know what you guys think about the content in the description below. Check out the premium list if you want access to exclusive content that you won't find on the public channel. Subscribe to the channel if you want to see this stuff in the future, these more in-depth analysis. And then also remember to check out the Telegram channel, which you can find a link to in the description below. That'll wrap it up for this video. We'll see you guys next time. Bye.